Internal Revenue Service IRS tax news. IRS reminds business owners to correctly identify workers as employees or independent contractors. IR 2021-186, September 15, 2021, Washington. During National Small Business Week. Hey, that's this week. There's a link to that here as well. The Internal Revenue Service reminds business owners that it's critical to correctly determine whether the individuals providing services are employees or independent contractors. Let me give you my basic breakdown on this. So the scenario being, if you're an employer, you have a few different options in terms of getting help and assistance, hiring an employee, possibly hiring a contractor to help do some particular jobs, and or you could take on a partner in terms of a partnership and have an equity split. But we're not talking about that type of situation. So we're talking about employee or independent contractor. Now note that both the employer and the person that you're employing, whether they be a contractor or an employee, might have their own thoughts of what would be beneficial for them. Meaning you might have thoughts in terms of tax benefits and complications and whatnot of what you think would be best to hire a contractor or an employee. And the employee might have an idea of wanting to either be a contractor or an employee. But the option isn't just what the business owner, for example, desires. You got to make sure that you're in the context of being a contractor or an employee, which the IRS tries to set up guidelines to basically determine whether someone should be an employee or an independent contractor. So when you're coming up with these arrangements, then in order to pay someone for work that is being done, you want to make sure that they're falling into the correct bucket, and that if the IRS was to come back and question you about it, then you'd be able to say, hey, look, these are the characteristics that they do. This is why they are correctly assigned as an employee or contractor. From the IRS perspective, note that you would think that they would kind of lean towards people wanting to be an employee, because that means the IRS has more leverage over them, meaning they can kind of require you as the employer to withhold the payroll taxes and pay them directly to the IRS. Whereas if they are a contractor, then you may have to still issue a 1099, but you're not required to do the withholdings under that scenario. So the basic set of rules that the IRS has, if you go through their questionnaire to see if someone is a contractor or an employee, basically come down to how independent is the individual to do the work. So for example, if you have someone coming into the office and doing exactly what you ask them to do for 8 hours a day, 5 days a week, that looks a lot like an employee that's basically, working as an employee. If on the other hand, you're hiring someone to come in and, do a particular job, you say, hey, this is what I need it done by this date, and they take their own tools, they take their own resources, they get it done, they show you what their end product is, you're not looking over their shoulder the whole time. That's more like a contractor type of situation. Now, of course, there's a lot of gray area in the middle there. You can imagine many situations where you're like, they could go contractor or not. And that's where, obviously the questions come in a lot of the time. So that's the general scenario. So an employee is generally considered to be anyone who performs services if the business can control what will be done and how it will be done. What matters is that the business has the right to control the details of how the workers' services are performed. So if you're in charge of the details, you're saying, hey, I didn't like this line 17 of your email over here or something, right? If you're micromanaging on a day-to-day basis, then it's more likely that you have an employee kind of situation. So independent contractors are normally people in an independent trade, business, or profession in which they offer their services to the public. Doctors, dentists, veterans, lawyers, accountants, contractors, subcontractors, public stenographers, or auctioneers are generally independent contractors. So independent contractor versus employee. Whether a worker is an independent contractor or an employee depends on the relationship between the worker and the business. Generally, there are three categories to examine. So we have behavioral control. Does the company control or have the right to control what the worker does and how the worker does the job? So if the more control you have, the more likely you have an employee-employer situation. The less control, the more likely you have a contractor type of situation. Financial control. Does the business direct or control the financial and business aspects of the worker's job? Are the business aspects of the worker's job controlled by the payer. Things like how the worker is paid, are expenses reimbursed, who provides tools, supplies, etc. So once again, things like how the worker is paid. So if you're paying them on what you would think would be a standard kind of hourly type of rate instead of a job by job kind of rate, they still, if they're invoicing you or something like that, then you would think it'd be more likely to be a contractor. If you're calculating on some standard, what you would normally think of as an employee, you would think more of an employee. Are expenses reimbursed? So you would think that if they're a contractor, they cover their own expenses and then charge you for them in the invoice, right? When they bill you. So they're going to, if you're reimbursing the expenses as it goes, it looks more like an employee-employer type of relationship typically. And tools and supplies. So if you as the employer are providing the tools and supplies for the employee to do the job, if it's in an office, you're providing the computer, you're providing the fax machine, the printer. If it's out in the field, you're providing them with the tools, the hammers and whatnot in order to do whatever you're doing out there as well. Then again, it looks more like an employee-employer relationship if they're providing their own tools, if they're working from home and they got their own stuff and they're, paying for their own ink cartridges and their own internet connections and that kind of stuff, then you would think it'd be more closer to a contractor. Relationship of the parties. Are there written contracts or employee-type benefits, i.e. pension plan, insurance, vacation pay? So obviously, if you have these kind of things, if they're on the insurance plan, if you got the vacation pay, pension, you would think they'd fall more into an employee. Will the relationship continue, and is the work performed a key aspect of the business? So how long-term is the relationship? If it's a short-term relationship, meaning you're hiring someone and when the job is done, it's over at that point, then it's more likely, of course, to be a contractor. If you're giving someone new jobs all the time, more likely to be an employee. You can have a contractor that you're hiring again and again over time if you build a good relationship with the contractor. So again, there could be kind of gray areas in there, but you would think the contractor would be doing similar kind of contracting jobs, doing their own invoices, using their own tools and whatnot, and so on. So miscellaneous workers, misclassified workers. Misclassifying workers as independent contractors adversely affects employees because the employer's share of taxes is not paid and the employee's share is not withheld. Now that's, you could say whether or not you're hurting or helping by calling someone an employee or a contractor. Notice on the business side of things, it is true that oftentimes it's useful to classify someone as a contractor if you have the choice, because then you don't have to deal with all the HR stuff. You're most likely to get sued by your employees and whatnot, and you don't have, the IRS isn't forcing you to do as much in terms of withholding their payroll taxes, and you don't have the employer portion of the payroll taxes and so on. So you can see why on the employer side there would be kind of an incentive possibly not to have an employee in some instances. However, on the employee side, you might think, well, then on the employee side, they would totally want to be an employee in all cases. And that seems to be what they're kind of indicating here. But that's not totally true. I mean, there's benefits on the employee side to be a contractor as well. One of the downsides of being a contractor, I mean, really, obviously the IRS is kind of weighing in here. The IRS likes the employee-employer relationship, you would think, because that gives the IRS more control, right? The IRS is the one that's requiring the withholding of the payroll taxes and, whatever and all the other stuff. So if you're a contractor, then the downside is you do have to pay self-employment tax. So self-employment tax, which represents the employer and employee portion of Social Security. However, you only pay that on your net basically income from the business that you would have to report on a Schedule C. So in other words, you may get a lot of deductions if you're a contractor that you would not be able to get if you're an employee. If you're an employee, you can't really deduct things that you put into on your own time to pay for as an employee. If you're a contractor, you could deduct a lot more things, and therefore, although your self-employment tax is higher, you might actually end up with a lower tax. Also, you could have business tax credits and whatnot on a Schedule C type of business. So many contractors, many employees that have the choice might choose or opt in to be a contractor. It could be a beneficial thing. They don't have the same kind of benefits as a contractor too, and whatnot. They're trying to act like the withholdings are a benefit to the contractor, but you have to make your payments no matter either way. Either they're withheld out of your paycheck if you're a contractor, then you have to make your own tax payments to the IRS. So it's not really different. It's just who's taking the money from you to give it to the IRS. So there's pros and cons on either side, on both the employer and the employee side, or contractor and contractee side. So if a business misclassifies an employee without a reasonable basis, it could be held liable for employee taxes for that worker. So the IRS is basically saying, you can see the IRS's position here. If they think someone should be classified as an employee, but they're actually classified as a contractor currently, and the IRS thinks they're misclassified, that's who the IRS obviously is concerned with, because if they go after those individuals, then they can tell the employer that they have not been withholding the proper amount of taxes, because they should have been withholding federal income tax from the employee, they should have been withholding Social Security and Medicare, and they owe their share of Social Security and Medicare taxes as well as federal unemployment taxes. So the IRS, is usually going to scrutinize people on the side of, you classified someone as a contractor, we think they're an employee, you owe us payroll taxes, right? So generally, an employer must withhold and pay income taxes, Social Security and Medicare taxes, as well as unemployment taxes. Workers who believe they have been improperly classified as independent contractors can use Form 8919, uncollected Social Security and Medicare taxes on wages. There's a link to that here, to figure and report their share of uncollected Social Security and Medicare taxes due on their compensation. Voluntary Classification Settlement Program. The Voluntary Classification Settlement Program, otherwise known as VCSP, is an optional program that provides taxpayers with an opportunity to reclassify their workers as employees for future tax periods for employment tax purposes, with partial relief from federal employment taxes for eligible taxpayers that agree to prospectively treat their workers or a class or group of workers as employees. Taxpayers must meet certain eligibility requirements, apply for filing Form 8952, application for Voluntary Classification Settlement Program, and enter into a closing agreement with the IRS. Who is self-employed? Generally, someone is self-employed if any of the following apply to them. They carry on a trade or business as a sole proprietor or an independent contractor. So if you're self-employed, you're a sole proprietor or an independent contractor. Typically, generally, that would be one format that you can have, meaning if for tax purposes, you file a Schedule C for your taxes. They are a member of a partnership that carries on a trade or business. So a partnership, you have a group of, more than one person basically doing the same kind of thing. They are otherwise in business for themselves, including on a part-time basis. So self-employed individuals generally are required to file an annual tax return and pay estimated tax quarterly. They generally must pay self-employment tax, Social Security and Medicare, as well as income tax. So if you're self-employed, if you're a contractor, then you're going to have to file your own, you're going to have to track your own income, basically have an income statement. You're going to report it on the Schedule C, and then you're going to have to pay your federal taxes on it. You got to pay estimated taxes, and you're going to be needing to pay Social Security and Medicare in the format of self-employment taxes on that as well. So you want to keep in mind all those kind of things. The benefit of it, of course, again, is you possibly could have business credits that could be involved, and you might be able to get deductions that you may not otherwise be able to do as an employee. So self-employed taxpayers may be eligible to claim the home office deduction if they use part of the home for business. And that's more and more critical these days as more people are working from home and so on. So the home office deduction it could be a substantial deduction that if you're self-employed, you're way more likely to take. You generally can't take it if you're an employee. So that's another big benefit. Also, if you have mileage and stuff that you're driving around for your job, that could be another big, deduction that you may not have so much if you're an employee. What about the gig economy? Okay, here we go with the gig economy. The gig economy, also called sharing economy or access economy, is activity where people earn income providing on-demand work, services, or goods. Gig economy income must be reported on a tax return even if the income is from part-time, temporary, or side work, not reported on Form 1099-K, 1099 miscellaneous, W-2, or other income statement, or paid in any form, including cash, property, goods, or virtual currency. So the IRS is quite concerned with the gig economy these days because they haven't been able to fully manhandle it, IRS handle it, government handle it down and cripple the industry. Right? So in other words, they can't really track who's earning what quite as closely. So they're going to remind people that they still owe taxes whether or not you get a form related to it. So they might not have it locked down where they can force the gig economy platforms to hire you as a W-2 employee yet. So you might not get a W-2. They might not have it locked down yet in your particular case where you don't even get a 1099 at this point in time because they don't really know who should be processing the 1099 and so on. And therefore the IRS isn't able to really look over, and they haven't been able to lock down the form of payment because if you get cash, obviously that's always been a problem. Property, that's a problem because they can't track it as well, or virtual currency, which is the current problem. So then the IRS is saying, hey, if any of that stuff happens, you still owe taxes on it. So we still want like our share. So make sure you still report the income and pay the government because that's, you got to report on the Schedule C. Okay. So help spread the word, advanced child tax credit. The IRS encourages employers to help get the word out about the advanced payments of the child tax credit. There's a link to that here. During Small Business Week, employers have direct access to many who may receive this credit. More information on the advanced child credit is available on irs.gov, irs.gov. The website has tools employers can use to deliver this information, including e-posters, drop-in articles, the paycheck staffers, newsletters, and social media posts to share. More information and help. The Self-Employed Individuals Tax Center, there's a link to that here, has information for those who are in an independent trade, business, or profession in which they offer their services to the general public. Small Business Taxes, the virtual workshop, there's a link to that here, is composed of 9 interactive lessons designed to help new small business owners learn their tax rights and responsibilities. The Irs Video Portal, there's a link to that here, contains video and audio presentations on topics of interest to small businesses, individuals, and tax professionals. So there's links to that wonderful stuff here, and there'll be a link to this in the description.